Thank you. Welcome today.
Yeah, I cheated,
Chris. Thank you.
but I'm so busy.
Thank you. Okay, let's call to order the regular board meeting of the St. Louis Local Development Company. Thanks to everyone who's joining us today in person. We'd like to have a roll call, please.
Director Rabu,
Here.
Director Peoples,
Here.
Director Gleek. Here. Director McCreary,
Here.
Director Sites,
Here.
Chair Gilbert.
Here. Thank you. We have a quorum. The first item on the agenda is the approval of the minutes of the November 13th regular board meeting. Those were distributed. Are there any questions or corrections? Hearing none, is there a motion to approve?
So move.
There a
Second.
Been
Sites.
moved by Director McCreary, seconded by Director Sites. Will you poll the board, please?
Director Rabu,
Aye.
Director Peoples,
Aye.
Director Gleek. Aye. Director McCreary,
Aye.
Director Sites,
Aye.
Chair Gilbert.
Aye. Okay, the minutes have been approved. First on the next on the agenda, we have a resolution recognizing the service of Don Reeves to the Board of Directors of the St. Louis Local Development Company. Rodney, thank you.
Good afternoon, directors. Again, my name is Rodney Krim, and I'd like to present a resolution recognizing the service and commitment of Donald E. Reeves in support of the St. Louis Local Development Company. Whereas the St. Louis Local Development Company is a Missouri not-for-profit organization under Chapter 355 of the Revised Statutes of the State of Missouri for the purpose of furthering economic development in the city of St. Louis and promoting and assisting the growth and development of business concerns, including small business concerns in the city of St. Louis. And whereas the principal objective of LDC is to benefit the community by fostering increased employment opportunities and expansion of business and industry for the citizens of the city of St. Louis through its SBA 504 and other loan programs. And whereas Donald E. Reeves was first elected to the board of directors of LDC on December 10th, 2015, and contributed his time and talents to the corporation for nearly 10 years. And whereas LDC desires to recognize the dedicated service and commitment of Donald E. Reeves to the mission of LDC, and whereas in bestowing this honor, the Board of Directors recognizes the dedicated service and commitment of Donald E. Reeves to the LDC Board in furtherance of its mission. Now, therefore, be it resolved by the Board of Directors of the St. Louis Local Development Company as follows. LDC hereby formally recognizes Donald E. Reeves for his many contributions to the LDC Board of Directors and to economic development in the city of St. Louis, and hereby extends its sincerest gratitude and appreciation for his dedication and service to the LDC Board. LDC hereby adopts a certificate of appreciation of his resolution for Donald E. Reeves and further directs staff of LDC to present this certificate of appreciation to the family of Donald E. Reeves. The appropriate officers and agents of LDC are hereby authorized and directed to take all other actions necessary to effectuate the intent of this resolution. Adopted by the Board of Directors this day, 11th day of December 2025.
Thank you. Do we need to entertain, I guess we need to vote to authorize it, or is that even required?
In this case, I think it's a resolution. I think it would be appropriate for the entered into.
Okay. Will you poll the board, please?
Director Rabu,
Aye.
Director Peoples,
Aye.
Director Gleek. Aye. Director McCreary,
Aye.
Director Sights,
Aye.
Chair Gilbert.
Aye. Thank you. Thank you. It just passed. Our resolution is officially adopted. Thank you. And then Otis has something, a proclamation on behalf of SLDC, the city.
Thank you, Madam Chair and board members. Essentially what we did was, upon being notified of Don's passing, was to inform the mayor and others about the sad occasion. And as the staff of the LDC had generated a certificate, we essentially used the same verbiage. And so I'm not going to reread it to you. But I want to essentially take the key pieces of this proclamation that was prepared by the mayor and also acknowledged by the register of the proclamation here honoring his service to the board. And so this is from the office of the mayor of the city of St. Louis. And it says that the St. Louis Local Development Company. Oh, well, I'm not going to reread all of that to you all, but it's the very same thing. But it was the last line, I think, which is most important, which is different from that one, is now, therefore, I, Kara Spencer, Mayor of the City of St. Louis, do hereby proclaim December 11th, 2025 as Donald E. Reeves Day in the City of St. Louis. So this will, in effect, be presented to his family as well, along with the certificate, and I wanted to be sure that the board was aware of this recognition.
Thank you. It's appreciated. It's great. I
Thank you,
all
Otis.
of-
I appreciated that. I was hoping that we were going to do that as well. So thank you.
Yeah,
You're
I
welcome.
think we all appreciated Don's involvement and his insightful questions in loan committee and the kinds of things that he helped us move forward through these years. Quite a few important loans and opportunities that we were able to take advantage of. It was really nice. So, thank you. Thank you. Okay. Moving to the business of the committee. Next on the agenda is amended resolution 25 LDC 11, approving a loan to Celadine LLC for the benefit of Wild Ginger Weddings. Roger, this is you.
This loan actually was approved at the November meeting, and it was to Celandine LLC. That's the EPC for the company. The operating company is Wild Ginger Weddings. And this is a loan that Lindell Bank is working on right now. So anyway, we've actually submitted it to the SBA. One of the things that we were trying to do is that when the appraisal came in, I think the bank said that if the appraisal is a little higher than the purchase amount, we may go ahead and put the appraisal and the environmental into that, into the loan. So that's basically what this does. It adds $3,000 to add the appraisal and the environmental into this loan. And then I think we added a very small $1,500 for the attorney that we have. That's normally it's 2,000 and our attorney is 3,500. So we just added that in, and that's not part of the divided up. It's added to the net debenture. So the 3,000 is actually added to the loan amount. So it actually works out that instead of the loan amount being 173, it's 176,000. And then the original amount goes from 415,000 to 418,000. That's at 3,000. And then the bank amount is going from 207.5 to 209. And the individual borrower is going to have to put in 41,800 instead of 41,500. So anyway, so that's just it. It's just adding that, but we wanted to get that in so the borrower can get benefit of that added $3,000.
Are there any questions? Is there a motion to approve the to approve the amended resolution?
So moved. Or second.
Thank you. It's been moved by Director Gleed and seconded by Director Johnson. Can we poll the board, please?
Director Rabu,
Aye.
Director Johnson,
Aye.
Director Peoples,
Aye.
Director Gleat. Aye. Director McCreary,
Aye.
Director Sights,
Abstain.
Chair Gilbert.
Aye. Okay, the amendment has been approved.
All righty, thank you very much.
Next on the agenda, Resolution 25 LDC 14, approving and adopting goals for fiscal year to 2026 investment in economic development activity. Zach?
Yeah, good afternoon, everyone. This is a regular resolution that we see pretty often. This is approving our goals for non-504 loans through the next fiscal year. What this resolution is recommending from the LDC staff is setting a goal of at least four more non-504 loans totaling at least 400,000, which is roughly about the amount that we've made in the previous year as well. So happy to answer any questions anybody has.
This is just one of those things we're required to do annually, set some goals, and then we have something to measure ourselves against.
Correct. The SBA requires setting goals for other economic activity or economic development activity. So that's what this resolution sets to do.
If we don't reach the goal.
Not that I'm aware of, besides they want us to actually meet that goal. If we do no other economic development activity, then there is some ramifications as far as our setting as a CDC. But so far this year, we've already approved some other loans, so we're not at risk to meet that in this next fiscal year.
I have a question.
Mhm.
Does this incorporate what, if any, impact the tornado had on certain businesses? Has it gone up or down? Does this factor that in?
Yeah, so that would be included throughout the entire fiscal year. The way this is written is for the remaining part, this next part of the fiscal year. So more looking at, in addition to what we've already done, adding in those four loans at 400,000.
Question.
Any other questions?
I have a question.
Somebody have a question on Director Rabu?
Yes. I'm just curious what it was last year or the last time we increased it, and how does it impact the grading we get from the SVA? Yeah.
I'm not sure. Do you have the number from last year?
The goal, I think, is the same as what we
Yeah.
had last year, and SBA doesn't really grade us on these things. They just want to be sure that something we're taking into consideration.
Yeah, I don't think they can hear
Yeah,
you.
did you hear that?
Yeah.
Okay.
Thank you.
Thank you. We're beating the bushes. We're doing our best to do some loans, right? So, okay. Any other questions? If not, is there a resolution to approve, or a motion to approve this resolution?
So move. Sites.
Second, McCreary.
It's been properly moved and seconded. Will you poll the board, please?
Director Johnson,
Aye.
Director Rabu,
Aye.
Director Peoples,
Aye.
Director Gleat. Aye. Director McCreary,
Aye.
Director Sights,
Aye.
Chair Gilbert.
Aye. Okay, the resolution is approved. Next on the agenda is Resolution 25 LDC 15, electing directors and officers of the St. Louis Local Development Company for the 2026 term.
Yeah, so this is another house cleaning item. This is electing the next slate of the board of directors for the next year, starting on January 1st, and then finishing up on December 31st. Those directors are Laura Gilbert, James Seitz, David McCreary, Christopher Peoples, Ann Gleat, Rabu Ahmad, and Connie Johnson. And then as far as for the officers of the board, that'll be Director Gilbert again as president, Director Seitz as vice president, Director McCreary as treasurer, and Director Rabu as secretary. And then for the non-voting officers, that'll be Otis Williams as the interim executive director, Rodney Krim as the vice president, Roger Schluter as the assistant secretary, and then myself, Zachary Folk, as the assistant secretary. Any questions on this?
So we have a vacancy,
Yes.
right? So we need to.
I believe we have
thinking-
two vacancies.
Two, yeah.
Yes.
We need to be thinking about filling those. A quorum is always tough to get sometimes, and with two vacancies, it's even worse. So let's give some thought to that and make some recommendations if we have some for people to join the board.
And what are the requirements? City resident, or you live in the city, or what's the?
Either live or work in the city, and then you have to fit a certain goal within what the SBA has, which I mean, everybody on this board obviously fits those goals, so it have to be something within economic development, lending, accounting, something sort of related field to. Yeah. Yeah. So it
So it's a pretty.
there's quite a bit of broad terms. Definitely would help if we have some more lenders too on the board for our credit committees. So, but yeah, those are the general requirements.
Okay, thank you.
Has Simmons Bank ever been active or a part of?
I believe so.
Yeah.
Yeah, I know we've worked with them on 504 loans before.
For disclosure, I'm on the Community Advisory Board for Simmons Bank. And they had been talking more, they have some products out that they're ramping up for small businesses. I was just curious if there had been any connection. I have not tried to make a connection, but I was just curious if there had been any.
Trying to remember if they got a branch in the city.
We do.
Mhm.
There's now one on Kings Highway,
Where-
and then there's one in
okay.
Grove.
Couldn't remember.
I sure will.
Okay, great, good. Thank you. So now we have to vote
Mhm.
ourselves in, guys. Need a motion. Yeah. Is there a motion to approve resolution 25 LDC 15?
So moved.
Second. Johnson.
Okay, here we go.
Can we properly moved and seconded? Can we poll the board, please?
Director Johnson,
Aye.
Director Rabu,
Aye.
Director Peoples,
Aye.
Director Gleet,
Aye.
Director McCreary,
Aye.
Director Seitz,
Aye.
Chair Gilbert.
Aye. Okay, resolution has passed. Okay, next on the agenda is to discuss the subordination request for H4 Manufacturing, a request for a lien release for real property collateral from CMT LLC. Zach, you're gonna do this too? Excuse me.
Yeah, so we discussed this at our credit committee this past week, looking for some ideas of how to move forward with this. What they're working on right now is a SBA 7A line of credit for their business to help them with expanding into inventory and taking on new clients. With that 7A, they are looking for a subordination of our current loan that we have with them for 100. It's 150. I'm not sure the exact. Do you have the balance roughly? It was recent, so been with that. So as part of the kind of contention with this, there is language that includes any event of default that we would forfeit payments to the bank as part of that. There is not a specific list of defaults. I think kind of the discussion we had at the credit committee was that we wanted it limited to just in the event that they do not have payment towards the banks, but they are unable to move forward on this. So more looking at direction from you all as far as what we can do moving forward to resolve this. Kind of the options that they have available is either we agree to their terms and subordinate to them. they can either pay off the LDC loan entirely and just move forward with the 7A, which they do need an increased amount of funds, especially getting towards the end of the year with certain bills due and trying to expand into new clients going into the future part of the year. And then we will also be working with them on getting a SBA 504 loan for them to purchase their building. So they are working on that as well going forward. So more looking for opinions and advice from the board here. And I don't know, Linda, if anything else you would like to add?
No, and Jackie might want to add something too. I mean, we had suggested the other language that would just limit the ability for them to stop payment only if they weren't getting payment. And their attorney came back and said, well, there's other reasons that they may want to call it in default. And I think we're concerned because of the experience that we had with our prior loan to Urban Chestnut, that they told us to stop payment. And when I look through their loan documents, their events of default can be pretty broad. Anytime the bank feels insecure, so we wanted that to not be so broad in our case. So,
And I think that's a reasonable request. I mean, it seems to me that they're being unreasonable. If they're being paid, then they are feeling pretty good, you would think, about it. And that's what we're saying. As long as you're being paid, we should get paid. And if they're not getting paid, then we understand that that's an event of default. But the other ones are so broad.
Was
They-
there a debt service coverage?
they're,
clause
they're,
there?
and that's what I was concerned about.
That's what
They're
we were hung up with.
right. And I think they want a 1.2 debt service coverage in connection with this loan. And that was our exact problem the last time when we encountered this.
And the comment to me was, well, we agreed to it for the new market tax credit, so we knew this was coming. So what's the big deal, basically?
Well, and at the time we agreed to the new markets tax thing, it was kind of like they needed to close that day and we didn't have a whole lot of time to do anything with it. Plus, we didn't really see new markets coming back. They didn't have those provisions in their documents that would maybe give rise to their reason to feel insecure or to stop payments. So this is kind of where we're at. I mean, part of the problem is LDC made the first loan. We have the UCC that was filed first. So they want, us to subordinate with the shared collateral. Given the amount of loan that they're going to put ahead of us, I mean, one option would be just release our UCC and not have the joint collateral to argue over. But then, we were trying to see if we could get some other type of collateral instead, and we haven't really been able to identify anything else. So this is kind of where we're at. But they're very eager to close this loan to H4, and
Especially before the end of this year.
so they think we're being unreasonable. And, and again, what we kept telling them from the beginning when they first sent everything around is this was a decision we needed to bring to our board, and they're always, well, we need to close now. Well, so we're open to any other suggestions, anything that might help move this on.
Well, and are we going to be facing this again when we get to the 504? Is that going to be something they're going to want to change?
It would be a bit different collateral with it.
Yeah.
So we would be specific to the equipment as part of that,
Right.
and also with the
building.
the building itself. So it would not have cross collateralization there, so we would not have that same issue.
We've done this on individual cases before, haven't we?
We've subordinated on individual cases. This
Right.
it's the particular language that of that subordination that the events of default are too broad in this case.
That's what we remember when we had Urban Chestnut and then the bank stopped them from paying us for a long, long time. And, they were still paying the bank, but they weren't, the bank was saying, stop paying us. No, nobody's paying us.
Right.
Yeah.
Well, They
No.
went through bankruptcy afterwards.
The
But
bank
there
was
was
doing-
a period of time when the borrower would have been paying us,
Right.
and the bank
The bank would
didn't
let
let them. And I believe this is the same bank, which is why I'm
yeah.
especially concerned.
What was the name of the bank again?
Midland States Bank.
That was Midland States. Yeah.
Well, it's not unusual for banks to have kind of event of default clauses in their loan documents. That's
Right.
pretty standard. It seems to me that what we were hung up before was the debt service coverage ratio. In 1.2, I mean, if we came back and say 1.0, you think that's something to have them lower that debt service coverage ratio?
I mean, it's at least something we can go back to them and say, would this be this would be a kind of meet in the middle? Yeah,
I'm just throwing it out.
Yeah.
I mean, that still doesn't deal with the other language where the event of default is when we feel uncomfortable.
And how much is it that we're talking?
so for the new loan, it would be 500,000. For our loan, it's about 150.
Do general subordination terms of anything. I don't feel good this Tuesday, so.
Yeah.
And as far as the collateral coverage, I mean, does that put us in like a negative?
It's since it's a UCC, it's kind of depends on how we look at it. You know, we don't necessarily have the ability to go after things like inventory or accounts receivable, things like that. So we're pretty limited to their actual equipment, which a good amount of their equipment will go towards the 504 loan. So we don't want to touch that, so we can keep that with that. And the other items are not as much on the balance sheet. So we would be basically unsecured with their amount ahead of us. I do think it's important to note that it is a line of credit, so it's not something that will be all used at a single time, but they're still ahead of us by that 500,000.
And the guarantors don't have anything to offer?
No, they do not.
Trying to remember the
Yeah, can you?
personal financial situation on that.
Yeah, it's not a bad at all personal financial situation. They just don't have anything specifically for collateral that they could offer.
I need just a thumbnail sketch on what these guys do.
Yeah, so it's a metal fabrication business, just right over off of Shoto, not too far from here. So they do a lot of, a bunch of generals, or I should say, specific kinds of metal fabrication for a bunch of different things, but more specialized for different industrial needs of different businesses. Yeah, so they're expanding a bit. The new owners took over in 2019 from a family who's owned it for a very long time. So they've been around for a very long time, very established. Yeah. And they've increased the amount of business they're doing. They've diversified their customer base. So they're doing very well moving forward.
Themselves too thin.
They haven't, and that's kind of the thing is, so they had issues with COVID, and that's where they came to us for that financing. They've gotten their accounts payable all caught up. They've gotten everything that was passed as a result from COVID all caught up, and because of that, they are not very liquid at this moment. So they want to use these funds in addition to be able to increase what they are doing because they have that interest in those customers.
The payback on this loan.
So it's interest only since it's a line of credit.
You mean our loan or the other?
No.
Oh, our loan. Sorry. Ours was 5 years.
And we made the loan earlier this year, and it was very helpful to them, and they were very appreciative. It's just, they have this other, project that they're trying to undertake now, where they did get the new markets money to help with that. It's just that the whole structure of the new financing is kind of more complicated than we're
And
used to.
they're paying on time and everything to this point.
Mm.
On the
Oh,
interest.
yes.
Yes.
I'm not a banker, so I have a lot of suggestions. I just had a lot of
Yeah.
questions.
No, it's good questions.
No, it's,
What do you think about the
it's
change
just,
in the debt service coverage?
well, I don't object to that, but does that get us comfortable with that other default, with the default situation? I mean, it's going back to them to ask for something we didn't have. But it's broadening their ability to just stop everything.
I think that experience of having been through
Yeah,
this once already
once
with
already.
that bank is what's probably the most disturbing
Mm-hmm.
is the fact that been there, right?
Yeah.
Mhm. I will say it's probably going to be a different situation, given that their debt service coverage has improved a good amount, and they won't necessarily have the issues as the previous one as far as meeting that requirement for debt service coverage, but more just on my idea of how things are going to go going forward. But we're also trying to protect ourselves in case that's not the case.
So, to add my 2 cents, considering that this has happened before, I mean, not that we're wishing anything to happen bad, right? So, but that's not how you underwrite. So, I think the debt service coverage is probably a good concession, but I feel like it's still, as long as they have the right to kind of do what they did, I don't know that we have any recourse, right? So
So
what would happen if we don't if we disagree? How is this going to affect their closing in December?
So the two options they have is to either not move forward with the 7A loan and keep ours, or what would be more likely to happen is just pay our loan off and move forward with the 7A, since that's a better amount for them. They'd prefer not to because our terms are better when it comes to our loan, but they need the cash currently at the moment, so that would be their other option.
So if they pay us off, now we have that money to lend out again. Not that we're having trouble with that.
Yes. Yeah,
But
the only thing we would lose out is the interest payments that we would have received.
Yeah, and if something does happen and the bank tells them not to pay us, then we out of both the money and the interest.
Correct.
And based on your assessment of them, they seem to be doing well, almost like they don't really need the loan, or they still need the loan. It's a nice to have, but they're doing good business wise.
Yeah, they're doing good business wise. It's more at the current moment. They just need liquidity with tax bills coming due and increasing their inventory. So it's a more of a particular moment in time that they're needing this amount of funds. But I mean, kind of the other benefit to them taking a line of credit with this particular loan is that they're able to pay it back quicker, and they're able to draw from it as they need as they're increasing their business. So it helps with scaling a lot more. But yeah, they're kind of considering it with their options, so trying to figure it out from there.
So do we have a list of like loan covenants that would put them in default, like other than the debt service coverage? Like a collateral borrowing base? Is there?
We asked for a copy of their loan agreement, and it has several things listed as an event of default, but the one that just says, the bank feels insecure, that seems to be a pretty broad thing. But I'd be happy if you want to share you the copy of the
Yeah, I mean,
loan
I can
agreement.
tell you from experience of I don't know how many years as a bank, we've never called a loan because we didn't like the way somebody looked, I mean, that's just
Well,
kind of standard language in the loan documents.
it's not calling the loan, it's saying, we don't want you to pay them anymore because we don't feel like you've got enough coverage to pay us. That was what we encountered
What
before.
would need to happen is if they paid it down to zero, then could they start paying us again unless they draw on it? Or can they just still not pay us because the bank said, you've still got the availability to draw and we don't want you.
Given that the loan would still exist and it wasn't termed out, then they could still technically do that.
Yeah, because they could draw it at any time.
Yeah.
I feel like with the experience of that's happening to us before, it feels somewhat, I don't want to say irresponsible, but it feels a little shaky to agree to those terms.
I guess if we can potentially reach out and see if we can get maybe not necessarily remove all of those, decrease the debt service coverage, and then remove if they feel insecure at any given time, would that be acceptable? If they're willing to accept it, I'm not 100% sure on that, but at least something we can go back to them with to basically ask them, can you not be so broad? We understand that there would be multiple reasons for events of default that you would take priority over us, but we want to be specific so we know exactly when those situations would happen. Mhm.
Because I am not. If they had said you're in default, you can't pay the LDC anymore, once they paid all of that back, would it be more likely that the bank would be able to terminate that loan at that time if they had already declared them in default, or do they leave it open and we still don't get paid? I know you probably don't know the answer, but I'm just curious how that works.
Well, if you declare the loan in default, there's a lot of things you can do. In the bank end, you can freeze the line, you can probably tell them not to pay. I mean, there's
Yeah.
probably a lot of things they can do.
I
Yeah.
just wonder
You
if
know.
they get all the way paid back.
Well, then they wouldn't, I don't think they would
They-
care what they do if they're.
Yeah, I don't think they would care. They'd probably terminate the line first before saying, yeah, it's
So then we can get paid.
it's more that is an option for them to do if they want to keep the line open and say we want them to increase their liquidity before whatever. More likely, if there was an event of default, they would pay it off and then terminate the line at that point. Yeah.
Madam Chair, can I comment? I mean, given that we've had this experience now twice with this bank, is it something that we can require of? I mean, we know before we loan that the bank that they're associated with, right?
Yes.
Okay. So would it be, it's like a list, I know with the Army Corps of Engineers, we used to have a list of construction companies that were difficult to deal with, so we put them on a list. I mean, for me, we need to make sure that we don't deal with this bank again.
So I would say from a 504 perspective, I've done a couple 504s with them, and it's not the same experience on that end. They've been great to work with on the 504 side. It's more particularly the 7A.
Well, no, I think they're picking on us. And so I think we need to pick back.
Okay.
At the time we made our loan, there was no other bank or anybody involved. We were the first one, so we didn't know this was coming up later type of thing. So.
Oh, well.
So it's just a matter of what do we want to go forward with? If we want to tell them pay off our loan or,
Well, to me, that seems the safest thing for us. Pay off the loan if you're not willing to make some changes to the coordination.
Okay.
You can ask, right?
Mhm.
If they can remove that general language, so then we understand that that's a default.
Okay.
Yeah.
Yeah. Then we'll go.
I'm willing to do the debt coverage service reduction too.
Would you suggest a 1 or 1.1?
Probably one.
1?
Yeah.
Okay. Okay. I think that sounds good. So we will see if we can request that from them and then move forward from there.
Am I just not being familiar with what happened previously and just kind of being a stickler? I would just I just want to make sure we're being consistent. If it comes back up again, do we have a standard protocol or policy for this? Just curious.
Yeah, there's not a specific collateral policy that's written out in terms of we try to collateralize the loan as much as possible. That's the specific language that's in our policy. So a lot of this kind of situations require us to kind of look at the situation, given that we've had experience with it in the past. That's where we know where to look for it in the past. But I don't believe there's any specific language, at least in our credit policy or servicing, in regards to this for a subordination to it.
Be referred to like a subordination.
We're
policy.
always,
Right.
for
Yeah.
the most part, subordinated to a other lender if that's necessary to do the project. That's sort of one of our things that we do. We're a secondary or behind the first mortgage, but we also have a fiduciary responsibility to get as much collateral as we can and to make sure we're covered as much as we can be, because we need those, in most cases, the funds to come back, so we've got more to lend.
But can we add language that even though we subordinate, that requires continued payment? That there's not an option that
that's
That's,
Yeah.
Okay, that's typical, because that would just be a straight subordination. This subordination agreement is really an intercreditor agreement with standstill language, and that's what I object to.
I don't like it.
I don't either.
yeah. But yeah, kind of also to add a little bit more to that too, anytime we are subordinating to debt as we're going into the loan, we do require getting the whatever debt we're subordinating to get the term sheet for that and get all the information about that. So when we present it to the credit committee, they have the full information on how that is structured.
I guess my question was, people keep saying this happened before. Are we following the same policy procedure that was previously done? Because I don't have anywhere.
Well, this is changing that.
Yeah.
As far as, since it was done previously, it did not work out for us. So now that that's why we're having this discussion, because it didn't work out before.
So will we have a policy moving forward on how to handle this, should it come up again?
I guess we could codify it. Yeah.
Again, most of the time, we're drafting the subordination agreement and it's our terms. This, because of the new markets and the bank involved, they had, all their attorneys drafting this intercreditor agreement. They sent it to us and, I was concerned about the language. We'd look, Jackie went back to them and said, why don't we try this? And they basically said, well, we don't understand. What do you object to? So maybe we just need to talk with them a little bit more and explain what our previous experience had been and why we're worried about this and why we don't really think it's necessary. I mean,
I think they need to be aware. So unless board members want to be that person, we will have that conversation.
Yes, Daryl.
I just to say, I agree with Laura's approach. They need to change we ask them to change the terms or pay us off, because I mean, one way to look at it is that we've served the purpose that we set out to help this business come out of the situation it's in. So at worst, if they pay us off, we still serve them and we can redeploy the money with somebody else. I think that, but again, of course, not to put them in any hard situation. I know we want to codify it, but I know like these things tend to be fluid and maybe a little bit nuanced. So I know you guys might need to come back with more information, and it might be back and forth. So, but good luck.
Follow up to your question regarding the policies and procedures regarding subordination agreements. We are in the process of looking over everything, and so we can address that so that in the future this has occurred, we'll have something that we can follow.
I just, from another organization that I'm aware, when they handled it kind of on a case-by-case basis, I mean, I'm not mentioning the organization's name, but now they're left, for lack of better words, holding the bag,
Yeah, well, you set precedent and then you have to go with it, yeah.
Yeah, and so you want to, you have a more closer relationship with your clients here, and so you kind of go on that case-by-case thing. But like I said, now I know an organization that's in a little bit of fiscal straits because they have not been able to get any money back, and they got big loans on the books.
And the other thing is that because it changes the structure of the loan that's been approved, we always going to bring it back to the board for approval.
Thank you.
Thank you. Thank you. Is that enough guidance, guys?
I think so. I appreciate all of it.
Thank you.
Thank you.
And thanks to everyone for your thoughtful consideration on this. So we're in a good place going forward. All right. Shall we move on to the status of accounts, or we had another loan we wanted to discuss? Is that?
We had brought this request up with the loan review committee last week. LDC made a loan to CMT Roofing back in 2022, and the business is no longer operational. They're trying to sell their building. The amount that they have a contract for in a building is not going to be sufficient to pay off the first lender and to pay off LDC. And the borrower, and I think Parker Elliott is here, they've asked if we would release the lien upon a certain payment. It's not going to be enough to pay off the loan, but if they could bring the loan current to where it should have been, and then they would, try to make monthly payments over the next couple of years. They also mentioned trying to sell some equipment that hasn't been sold yet, that maybe we would get the proceeds of the equipment. And there's a vehicle that they're trying to sell. I believe they think they could get $40,000 for the vehicle. So I think what we're trying to do, and Parker is here and he can explain the situation a little bit more, to basically release Arlene, we're hoping that, prior to doing that, we would be able to get, basically, I think the amount was about $73,000, but maybe we'll let Parker explain what he's proposing and can go from there.
Yes, Parker Elliott of CMT Roofing. Essentially, what we're trying to accomplish here is to sell our office building on 4401 Ridgewood Avenue. We previously entertained this idea, but the buyers fell through. And essentially, what I am proposing is that whatever remaining proceeds after title is cleared, or on the closing statement, once SLDC's payoff amount is removed, essentially whatever proceeds are left there could go directly to SLDC, and we would also pay an additional $35,000, which would just come from our own personal pockets, to get the loan to be less than $150,000. If you look at our closing paperwork and our deed of trust and the liens on the office, you will see that both the lien on or the deed of trust on the office was never to exceed 150,000, as was the collateral for the vehicles that we purchased with the loan proceeds and the UCC lien that you guys filed on general business assets and equipment. So essentially, in giving the closings at proceeds and paying the additional $35,000, that would ensure that the loan is less than $150,000 so that some of the collateral could be released just according to original loan documents. But we also have equipment and we still have a truck that you guys have a lien on because we purchased it with company or with the loan proceeds. So we would obviously be selling that as well. We got a quote from a dealership for $40,000. So that would be an additional $40,000. And we also still have Bobcats, which we got a quote on for $55,000, which we could give to you guys. But essentially, and also all of the things in the office, fixtures, furniture, equipment, all of our lifts, all of our excavation and scaffolding equipment, things of that nature. We're going to be hosting an estate sale essentially to sell all those things. And those are all very expensive pieces of equipment that operational construction companies would benefit off of. So we would also be giving those proceeds to SLDC in order to pay the loan down. And obviously, those things are separate from releasing the lien from the sale of the office, because the only thing the title company is essentially worried about in selling the office is the deed of trust connected to it. So if there's an additional agreement that my lawyer needs to draft, or I know you guys prefer to use your lawyers, basically outlining that any proceeds we get from the sale of the vehicle, the sale of the office inventory, we would give to you guys, but also the previous truck, the insurance proceeds did go to you guys. So I think that you guys, I think that it would be known that those proceeds will go to you guys because you guys have security interest in them.
Parker, do you have a date when you're trying to close the sale of the building?
Tomorrow. We were trying to close on the 1st. And obviously title sent us a closing statement inclusive of the full payoff amount of this loan. And with that, we would have to come to closing with a couple $100,000, which just is not feasible. So essentially we, as the partnership, needs to get an updated payoff quote to the title company so that we can close affordably, because I tried to explain to them, obviously, this is a greater loan and they have collateral outside of the office. But they're going to need a payoff quote reflecting that. And I would want that as well. And I would also want to be on the same page with you guys as to where the proceeds are going and how we're going to move forward.
And how soon can the vehicle be sold?
So the vehicle quote that we got was via Carvana. And as you know, they're like a national company. So the vehicle said that initially when we got the quote 3 weeks ago, said that it could be picked up in as little as 48 hours. But I haven't checked on like pickup and delivery and things of that nature. I've only refreshed the quote amount since like initially trying to get rid of the vehicle. And also to add, selling the office would essentially save us $17,000 a month, because we have a $9,000 mortgage on it, insurance. We have to pay all of the landscaping, the security monitoring, taxes. So in eliminating this, it would also put us in a better position to make payments on our other things, because as you know, when we first engaged the partnership, our debt ratio was very negative. And at this point, the only loans that we have is the mortgage on our office, the loan with the partnership, and a loan with SBA EIDL.
Am I having questions for Parker?
Yeah, is there a chance you can just go ahead and sell that vehicle quickly before you close the loan on the building?
Yeah, there is.
Vehicle's ready to be sold. Let's get it sold, and then, schedule this closing based on that we'll get those proceeds, and then, go ahead with looking at releasing the lien on the building so you can move things forward.
I agree with that. So, just to make sure that I'm understanding clearly what you're saying, when we get rid of the office, I mean of the truck, and you guys get the $40,000 sale proceeds from that, at that point, you guys would be comfortable releasing the lien on the office property.
With the additional money that you were going to pay.
Yeah, you were the additional funding that you also committed, the
Correct.
35,000.
Correct.
We would get both that and the proceeds of the sale of the vehicle.
Correct. So $75,000, and you guys would release it essentially.
Yes, I think that makes sense.
What's the sale price and what do they owe?
The office is being sold for $915,000. Our first mortgage on the office is $800,000, and then our brokers are obviously getting a 6% commission, which is $54,000. And the retaining wall in the back of the office collapsed a couple years ago, and there's some minor maintenance things that need to be done with the office. So the buyers are also taking, or the sellers are also taking a $25,000 credit. And then there is the real estate taxes for 24 and 25, as well as the you guys' loan with the partnership. So essentially the credits on the building is $950,000, and the debits on the building is about $1,010,000.
You're gonna have to come to closing with cash?
We would, well, yeah, basically, but it would put us in a much better position than having to pay $17,000 a month to maintain an office, as well as we would be in a much better standing with this loan post closing than after closing. Um, we were hoping that we could close and not have to come to closing with anything, but based off of our previous interaction with the last buyers, you guys were sounding uncomfortable with us not having any skin in the game, essentially.
So there's no cash to seller, there's no net proceeds? Doesn't sound like, right?
The net, so right now there are no net proceeds, but the if if the closing statement if the payoff quote for the partnerships loan is removed from the closing statement, there would be net proceeds, but nothing significant.
Well, the business is basically closed. There's no cash flow. There's nothing coming in. Yeah, nothing coming in from there.
Of course, it's
Their
gotta come up,
standpoint.
it's 175,000.
I'm sorry, I didn't catch that.
I mean, the statement that Linda gave me, looks like you have to come to closing with 175,000 to get this closed. Is that right?
That would be to pay off the entire balance of the LDC loan.
Oh, that includes our payoff?
It's all right.
And our
But
payoff's
if you
150.
take out LDC's money, there's maybe 8,000 left over. So what I think Parker is saying is we would get the 8,000, whatever is left.
Net proceed.
Right. And then he would be contributing
Okay.
cash to, correct, Parker? This is how it would work. You would be bringing in we would have about 35,000 in cash from the closing, and then the sale of the truck would be 40,000. Am I saying that correctly, Parker? Or maybe you're frozen.
Yes, you're correct.
Okay. Just want to be sure.
So we would get net proceeds, which is like
Yes.
9,000.
8,000.
Yeah.
Yeah.
But that's what I'm saying. If we're aligned on the payoff quote, you guys could provide them a payoff quote of, $43,000, which essentially would bring that closing statement with us coming to the closing table with $35,000, if that makes sense.
Well, and I think we could do that, but then let's get the trucks sold when we do that.
Yeah.
Is that
Okay. Does that sound good?
Yeah, I mean, given the circumstances.
Yeah,
I mean,
we've talked about this.
Again, you guys don't have to worry about reclaiming the money on the truck because you guys are lien holders on the title. So, we couldn't sell that without releasing the lien anyway. So I'm probably going to need you guys' cooperation in signing something saying that you guys will release the lien, but the payment will be made out both to the company and to you guys jointly. So we would just sign it and
Sale
get
of
it
the
to
truck,
you.
yeah.
Correct.
Okay, all right.
We're
Thank
good?
you.
Okay.
Thank you. We're good. Okay, Parker, the staff will get with you so that we can expedite this. Get you ready to sail. Go ahead and get the truck going, and we'll work with you on the real estate.
Awesome. Thank you so much.
Thank
I
you.
appreciate you guys per usual.
Thank you.
Bye.
Okay. All right. Finally, Chris, status of accounts.
Good afternoon, directors. The people on the call, you have an electronic version in front of you. Is that correct? Okay. And you all, I handed out a hard copy to. So the financials are for November 30th, 2025. Had revenues of almost $4,600 and didn't have any expenses this month. That means all the money that we made goes to the bottom line. The bottom line is still in the red, but it is moving forward. We're at a negative 77.5. But as I said, we continue to chip away at that. Didn't close any loans this month. Our portfolio consists of 59 loans at 9.6 million in principal outstanding. The 59, break it down for you between the two types of loans, the loans that we make in-house that I write checks for, I wire money for, and the SBA loans where we're a conduit. The the 39 loans at principal outstanding of 4 million. The SBA loans, we have 5.4 million outstanding. We used to make forgivable loans. We don't do forgivable loans anymore, so there's nothing there. Something I'm tracking for you, but it's not in the delinquency report, or the tornado relief loans. We've done 33 of those, 165,000. And I will say, this month was the first month that we collected payments, and we got payments on every one that I debited. So I was very happy to see that. Yeah. So hopefully that'll continue. You have 4 loans that are delinquent. Of the 4 loans, there's a little over 500,000 in principal outstanding. Looking at the ratios, loans to loans outstanding is 6.78, and principal to principal outstanding is 5.27. I have tracked for 25, almost 25 years, write-offs that this board has made. 96 loans we've written off, a little over 5 million in write-offs. But as I say, we do continue to try to collect, and we have collected on 41 of those 96. We've collected fully on 21 and partially on 20. So we've collected 1.2 million. So our actual loss for the last 25 years, 75 loans and 3.8 million in loss, which is not a definitive because we still do try to collect. And the good news is, if we have decent collateral, when they want to get rid of that, they got to come back to us. And that's when we have a great opportunity to collect. The second sheet is our financial statement. There's the red 77.5 down at the bottom. I've said this multiple times. The reason we're able to do that, if you look over to the right, you see the accounts payable SLDC of 222,000. So they are patient in collecting. So they're not going to put us out of business. And as we close more SBA loans, we're going to get rid of that. The next 2 sheets are the funds that we have to do the things we do. Almost 4.6 million in dollars available. Then every one of those dollars are in our bank account. So we have those available to lend. We have committed prior to this month 2.135 million. A caveat there, the tornado relief, we're not going to, if we close another dozen, we'll be good. So quite a bit of that original 2 million that y'all offered will be coming back, going back into the pot to lend out. And the next sheet is just a little more detail of where the funds came from that we have available to lend. You got everything. We had 2 EDA programs. One is an old EDA program that is now defederalized. The current EDA program, the COVID 2019 program, is the active one. Got some first bank money that we got some years ago. All these are much older loans. The Metro is the same as the EDA old program. That is also a defederalized program, which means we're not reporting back to the feds anymore. But we continue to operate the program the way we originally set it up, or very similar to the way we set it up. LDC is some local money that we got back when we got back some federal money, or when we paid in back some federal money. They didn't want to take the local money, so we kept it and use it as a revolving loan program. So all that is the 4.5, almost 4.6. The 2 loans that are 2 loan programs, or the tornado is a loan program. The elevator St. Louis is a loan that you all committed last month. Even if all that closed, you'd still have almost 2.5 million to lend out. Mm-hmm. The next 3 sheets are just our loan program. Nothing's changed from last month. Although we added 1 more month of delinquency. I mentioned to you all about the better weekdays. Technically, it isn't delinquent. We gave them we said if you pay off in 25, it'll be this much. If you pay off in 26, it'll be this much. And we gave them up to 2029 to actually pay off. So I want to show you that you can't really call them delinquent because they have till 29 to pay off, but they haven't made any payment. I want you to know it, and so I'm presenting it that way.
Do we
Um,
communicate with them at all?
Pardon me?
Do we communicate with them at all on any kind of regular basis or?
We haven't recently. They were in bankruptcy.
Yeah.
So we'll get on them again.
It just seems like we should reach out. I mean, we offered them these payment terms. Obviously, you're not doing it. Are you planning to do something in 2026? Just a touch base kind of thing would probably be good. So they know we haven't forgotten them.
Sure. And then the last sheet is the one I like to brag on. That's the 20 SBA loans, and every one of those are current. Yeah.
Because we get some percentage.
It's a
when
good
they
program
pay.
for us, and as we get out there and do more, it's a big chunk when we close the loan, and then it's a monthly service fee that we get. So it's good for us.
Does anybody have any questions for Chris? Okay, thank you.
Thanks.
Thank you. Good to see your face in person.
Yeah. Yes.
Okay, now, we're gonna get an update on the 504 program and any kind of, things we need to know about.
Yeah, so Chris already talked about the tornado loan, so I'll leave that with that. Looking at the pipeline going forward, so far we've closed 2 loans during this fiscal year. The elevator St. Louis will projected to close on the 17th of this month, so we'll have another loan closed. Going forward too, we've got 5 in the pipeline we're trying to get before all of you. One you approved today with Rogers, Wild Ginger Weddings. And then a couple more 504s. We've got 3 other 504s we're looking at, and another EDA loan that we're hoping to bring to you guys either in the next month or so. So also attached was the 504 overview that was submitted to you all. This is something we've done regularly. There's a little bit of a change on it. One with the minimum level of 504 activity, which is just need to get more 504 loans approved. Luckily, as I said, we've got 4 right in the pipeline right now that should hopefully get approved pretty soon. So that'll change that number back up to what it was previously with no other real change to that report. Happy to answer any questions about the pipeline or about the 504 lender report.
Does anybody have any questions?
Without make it happen.
We will do. Thank you all.
That's right. Is there, the only other business I'm aware of, there are some conflict of interest forms that need signatures, to go back, to staff, and those were distributed. She'll bring you one. She won't let you leave without one. And then there's one related to the SBA program. We're all signing on the same sheet, so that'll come back as well. Anything else to be brought to the board?
I have a question. The last time the SBA came in and did an audit, we weren't looking too rosy. Have the changes been made that they had recommended? What was this, last year? 18 months ago, 12 months ago? When was it that they came?
It was about that, over a year and a half. And basically what they said that we didn't have all of our insurance certificates up to date. So we've been trying to do a better job with that. Although I'll be honest, with all the tornado loans, there's a couple that probably aren't up to date right now, but we're certainly trying to keep everything together. That was our main complaint. The other things that they cited us on were, more, they just wanted us to change some of our written policies so that some certain things were written down more, but
I think we did that. We
right.
made some
So I mean,
changes based on what they recommended.
right.
Those changes have been made.
Yes.
Okay.
Yeah, they were satisfied with what we sent them as, here's our
And a part
plan
of
of
that
improvement.
was just what we went through a while ago
Yes.
with talking about establishing goals,
I believe that
those kind of things. Was that a part of it?
So that wasn't part of it, since we've done that regularly each year.
Yeah.
As part of establishing economic development goals outside of the 504 program. This particular report was something that they cited about reporting to you all regularly that we just talked about. So I believe they required twice a year in theirs, if I'm remembering right.
For that report, which
For
we've been
this
doing it quarterly
Yeah,
at this
which what
point.
they've been giving to us.
Right.
Yeah. And
So, in your opinion, at this point, if they came in and did it now, we would be much closer to flying with good colors.
I would say right now, their biggest concern would be our volume of loans, which is Zach just mentioned. We've got ones in the pipeline that hopefully will get approved in the next couple months that will kind of remedy that problem. We are getting ready to send in our annual report to SBA that kind of summarizes everything we've done the past fiscal year. We normally don't get too much feedback from that, but the other thing, there's been an awful lot of changes at SBA in the last year. A lot of people have left. They're making up a lot of new policies, different things. The one thing that they did send out recently was a kind of a self-assessment thing where they asked a bunch of questions, are you doing this? Are you doing that? There are a couple things that we aren't doing in terms of having it written in our policies. And we said that we would go back and, change the policies. So probably at our January meeting, we'll come back to you with those changes.
Will, as far as that self-assessment, a lot of the stuff that they said isn't written in your policy. They're things that we are doing. It's just not specifically that item written in our policy because it wasn't required before, as they just put out this new self-assessment.
I have one other question. Given our current administration going on in Washington, the matter that they have stripped the staffing, and I'm not sure to what extent on the SBA side, but have you noticed any adverse effects in order to make things happen because of that reduced staffing?
Yeah, so to give specifics about it, I believe they reduced, last time I heard it was 47% of staffing at the SBA. A couple adjustments that have been made. So when we have to do environmental reports, they removed all of their environmental engineers. So now we have to, as a CDC, self-certify instead of them certifying environmental reports. So we have to be a lot more specific on the language there. We're submitting it into the SBA, but they're not drawing any conclusions from it, telling us if it's good or not. It also is taking longer for processing 504 loans. I believe prior, it was about roughly 3 to 5 days to get a response. Prior to the shutdown, it was about maybe 5 to 7 days. Right now, it's I believe it's like 10 to 15 business days because of the backlog from the shutdown. And it's probably not as robust as responding to that particular backlog at the SBA. So really turn times are like the biggest thing, trying to get, at least from our side, reporting with the SBA.
So in essence, what I'm hearing is that you're have more of the processing work is required on your part in order to get the thing through?
Yes, so with a longer processing time, if there's anything that we have that they come back on and ask us for, whether they screen out that application, it adds just even more to that whole processing time because it's the same processing time as when we respond each time. So 3 days, if we have to respond once, is 6 days. Whereas if it's 5 to 7 days, that's nearly getting to a month because these are business days. 3 weeks basically, if we make a small little thing that can easily be adjusted to get a full approval from them. So that's kind of where the difference comes on that.
So I'm not hearing that all of a sudden where a month takes a month to get response out of it rather than the normal 5 to 7 days that you had previously.
Yeah, so
it's not extended out that far.
Yeah, not in any particular instance, but because each time we have to go back to the SBA, it takes longer. It makes each time we get a response longer. So we have to be a lot more careful on what we submit so that we don't have to get a screen out or anything like that.
Just curious.
Well, I think some of the things on the traditional reports that you've been sending us, it's the kind of things they, said before that we have too many things in one category or not, and it's the miscellaneous category. Well, how can you reduce that if that's the criteria you
Professional services.
Yeah, professional services, and it's there, if you look at them individually, they're all different companies.
Different
but
risk.
They're different, they fit in that one great big lump, and that's makes it more difficult, so. Okay, anything else to be brought before us today? No? Okay, if not, everybody have happy holidays, and I'll entertain a motion to adjourn.
So move.
Is there a second?
Second.
It's properly moved and seconded. We are adjourned.